Hello financial investors and welcome back to the channel. My name is Brent and today we are going to be doing our stock market weekly recap for the 3rd through the 7th of August 2020. It's our very first week of the 8th month of the year with 4 months remaining here in 2020. It is kind of looking like it's going to be a pretty positive to the end of the year, but we shall see how it all plays out. Right now we have a lot of the markets up back in the green, which we will cover here today. Now in today's video we're going to go ahead and go over our stock market changes within the 4 main indexes. Then we're going to go ahead and take a look at the entire S&P 500 performance here for the week, what stocks were up, what stocks were down, overall what sectors were stronger than the others. Right now I have last week's changes up on the screen, so we'll take a quick look at that, then we'll dive into this week's. And in the mixture we'll also be covering oil, the dollar, silver, gold, bonds, mortgage rates, the 10-year current yield, and wrapping it up right about there. So this whole weekly recap is just to kind of get the information out there and available on a weekly basis. That way we can look back in the future, say, something like this happens in another 5 or 10 years. What exactly took place during this time frame where maybe some of these companies we could look and say, okay, tech, where a lot of the individuals are having to be inside, unable to leave their homes, which businesses are going to be prospering during that time. And depending on the search situation of the world, we have an illness going on, so we have healthcare, Pfizer, Merck, Johnson & Johnson and such were pretty high. But also we have technology companies that are also moving higher as more individuals are signing up for new services or ordering products from online. So with that said, if you are brand new to my channel, have not yet subscribed, hit that subscribe button down below. Really appreciate it. If you do enjoy this video, find it helpful, entertaining, give this video a thumbs up. And if you have any comments or questions at any time during the video, just a question comes to your mind, or you want to go ahead and ask a specific question going over this video, or just a video on a topic, stock market, dividends, real estate, personal finance, drop it down in the comment section below. I do read and reply to all your comments, and let's go ahead and get into the video. So starting off with last week's changes, last week was a bit of a mix. We saw the S&P 500 was up 1.73%. The Dow Jones was negative by negative 0.16. The Nasdaq was positive by 3.69. The Russell 2000 was positive by 0.88. So of the 4 main indexes, the Dow Jones was lower, but that one consists of 30 stocks. Now, those 30 stocks don't have a whole lot of tech within them, besides Apple being one of the majority of them, but the S&P 500 makes up by about 25% of the FANG stocks, Nasdaq as well. So when you're looking at last week's changes for the week, the reason the S&P did so well is because it has Amazon, Facebook, Microsoft, Apple, Nvidia, Netflix. These big companies here, they make a big portion of the S&P 500, and I believe a pretty good portion of the Nasdaq as well. I know I've posted it over my Facebook page. They make up nearly 25% of that ETF, that exchange traded fund. So if you're invested in one of those, such as QQQ for the Nasdaq and VOO, VOO for the S&P 500. Silver, gold, bonds were all positive, with silver completely blowing up not only last week but this week. We'll take a look at it. Silver is up over 15% this week. Just amazing. Crazy to see how much this one is moving here in the short term. I'm not sure if anyone out there had actually called silver being so low, but it's kind of crazy to see how it's moving. Also, we had 10-year bond rates at the lowest ever at 0.54, which kind of was a red flag for a lot of other investors. I thought it was kind of a red flag. I was tuning into Gregory Monorino, I believe. I know he was also kind of mentioning, I like his videos. He kind of goes a bit different direction than a lot of the other YouTubers, as far as just thinking that everything is going to, it's good to have a mixture of both positive and negative and just see everyone's opinions. And mortgage rates, I thought they were really low last week at 3.3. They actually fell this week into 3.2. So we will take a look at that all in today's video. So right off the bat, let's go ahead and jump into the S&P 500. Now, I'm very sorry about the blinding white light here on the screen. we'll go ahead and go through here as quickly as we can and just kind of go over what went on this week. So Monday, Tuesday, Wednesday, Thursday, Friday, all positive day after day after day. Thursday, a lot of investors are actually thinking that, earnings happened this week, positive earnings week after week, coming in better than expected and really pushing this market higher. And then on Thursday, as the job numbers came out and actually more positive versus negative, the news was better than expected. I don't think I posted it over my Facebook page. That was something I was watching, and because of that, we had a nice little spike there and then trailed higher for the day. When the job numbers were come out, they were a little bit mixed, but then as they were reviewed, there were more individuals returning back to work than had previously not been thought of, if that makes sense. And throughout the rest of the day, the market just kind of trailed higher, and then Friday was a bit of a flat day. Kind of undecided whether investors should take profits and sell, going into the weekend, or what should take place here. So overall, up very nicely at 2.45%. The S&P 500 is now positive year to date by 3.73%. The Dow Jones almost there. It is almost there. Just slightly. If we have another week like we had this week at 3.8% to the upside, we will pretty much be flat for the year for the Dow Jones. So just having stuck through this whole illness that's been going on, it's crazy to see how these businesses have recovered here in just that 3 to 6 month period, when earnings here in the second quarter haven't been the best, but also weren't as bad as had initially been thought. So pretty positive throughout the whole week, up a massive 3.8%. So of the main indexes, the Dow Jones is the leader, but if we were to include the Russell 2000, the fourth one there, Russell 2000 beat them out of the water, which we'll cover here in just a second. So again, tech, sold off a bit on Friday, down 0.87%, but I believe that's a lot of just, Facebook, Amazon, Google. We'll take a look here, but they have had such a huge run up that they just decided to take a break and give back here a bit on Friday. Still ended up positive by 2.47%. The Nasdaq is putting all the other indexes to shame, up a massive 22.72%. And the Russell 2000 this week is in first place, up the best of the four main indexes, up 6%. So here we had a bit of a trailing off here on Thursday in the morning, kind of trailed lower. Job numbers, again, kind of looking over the job numbers, and it didn't actually wasn't as bad as they had assumed, and it started to kind of trail up towards the end of the day. And then on Friday, they made that nice return of 1.59%, putting them at a solid 6% return there for the week. I know there's a lot of articles going out there that if we do find a vaccine, that it's actually going to be negative for the market, or right now individuals are getting a second round of layoffs. So that is with the Russell 2000 up 6% this week. The after hours right now, stock futures are looking a bit positive, but again, this can all change going into Monday morning. So on Monday morning video, we always kind of go over stock futures and what it is taking to look like. We saw overseas over in China that they're actually negative on Friday by 1.6%. So interesting mixture there. Now S&P 500. Now this is the weekly performance. So 1 week change right here. Now we can see here that Amazon, essentially flat on the week. Last week went up nicely. This week just kind of flat. That's fine. Up 0.09%. Google 0.7. Apple continuing moving higher. A lot of investors are buying into this one right now prior to the split. I believe if you buy Apple, correct me if I'm wrong down in the comment section below, but if you buy Apple before the 20th of August and you have those shares, you will be eligible for the stock split. If you purchase Apple after the 20th of August, you will not be eligible for the stock split. So you definitely want to be purchasing your Apple shares now if you're interested in having them split. For every one that you have, you will have 4. So if it's worth $400 or say $500. Now, if you take $500, for example, say Apple hits $500, you split it into 4 shares, that $500 would be worth each share would be worth $125 or $500 for one share. So that's kind of how it's going to be split. Now, pretty much the whole market was very nice. You can see financials, insurance, healthcare, communications, industrials. The only areas that I could see right off the bat that were a little bit weak down here in the medical and healthcare area. Also, we can see a little bit of red over in the real estate and the utilities as well. So while the majority of the market kind of got carried nicely, and REITs did really well last week, I believed. Yeah, REITs did really well last week, so maybe this week they're just kind of being a little bit slower versus where they were at last week, and that's completely fine. Now, oil this week up 2.72% there on the week. We have the dollar continuing to move lower and lower week after week here. It started off at 93.33. Oh, I thought it actually ended lower, so it's actually slightly higher by 6 cents. So started off at 93.33 and stopped here at 93.39. I really thought the dollar would have weakened, but looks like it picked up here on Friday and actually made quite a bit. You can see for the week there, it dropped down at around 92.53. So you are starting to see a weaker dollar. We saw the lows, the previous close here was 92.79 on Thursday. So it's kind of interesting what took place on Friday to have caused it to spike up by nearly $1 there. We have silver. Here is our massive winner of the ETFs that we kind of track on a week by week basis. Silver here is at $26.17 or 15.54%. Extremely high. Gold also, kind of playing in the same area, not really, but they were up 2.9% this week. They are still the winner year to date. Oh, okay, never mind. I take that back. Silver is the winner, up 56.89%, followed up behind by gold, and then we have the NASDAQ. Those are our strongest ETFs that we are tracking here on our week by week basis. Bonds this week are down by 0.08%. They did go ex-dividend here on Monday, and then they were recorded on Tuesday, and they'll be paid out here in the future. Also, the 10-year rate moved up slightly. We can see here last week it was at 0.54. The 10-year is now at 0.56, so it is moving up slightly, but it's still a bit of a risky area. And mortgage rates fell by 8 basis points to a new low of 3.22%. I've seen first-time home buyers getting locked in at rates at 2.25 to 2.75. So if you are not out there getting interested, if you are interested in buying a home, your first time home, go out there, get approved, see what you can be approved for, get qualified. Now is the time to look for a home where, if you're looking at inflation at a rate of 2% per year, and your mortgage is going to have a 2.25, 2.75, it's essentially just kind of, it's so nice there. So that is it as far as the stock market recap. I did share some funny stuff this week. So, don't get FOMO, fear of missing out when you're buying a house. Stick to the mortgage that is about 20 to 30% of your income. And that's, a really good rule to follow. So if you're making $4,000 a month and you're spending say $1,000 in your mortgage, that's 20% or 25% of your net income. You just take the rent or your mortgage, divide it by your total net income, and that's going to give you a percentage. Multiply that by 100. Well, it's going to get you a decimal, multiply by 100, and you'll get your percent of your total net income. Microsoft making a move to buy TikTok. Also, Facebook or Instagram released their Reels, which is a very similar version of TikTok. Another thing that kind of interested me was that if the U.S. decides to ban companies or apps from the App Store, then I know Webull is a really popular investor app, and they hold a lot of U.S. capital, and they're doing promotions where if you move 10,000 or 50,000 or 100,000, they're going to give you a ton of stocks. So I always think it's kind of interesting. I use Webull, but I am moving capital out of it and over to Fidelity just for my taxable account. So I won't be using a whole lot of Webull in the future. And let me know down in the comment section if you are using Webull. Oh, here it is right here. Yeah, it seems like they're getting kind of desperate to get accounts over there. I get Facebook ads and emails constantly from them. Yeah, I'm in the same bucket. I'm constantly getting notifications from Webull, notifications to, come over, try them out. I did deposit an additional $100 over there because they did have a promo where they get giving away 3 free stocks if you deposit $100. So I deposited $100. I'm gonna go ahead and wait for my 3 stocks to be in the account, and then I'll go ahead and sell them off, move the capital over elsewhere. So Webull is a good platform just to kind of get those free stocks, but besides that, there's so many other platforms that you don't need Robinhood, you don't need Webull, you don't need M1 Finance any longer. There's so many other brokers. I believe Schwab, Fidelity now offer the full stock market investor experience where you get a ton of tools. You can track your portfolios. You can look at your total dividend income. Looking forward, I know Merrill Edge has had this feature for the longest time, but now Fidelity also has it. So I will be moving 100% over to Fidelity. It's just been taking a while just because of everything I have going on right now at home and also with work and such. So eventually I'll have that all panned out. I thought this was an interesting article. This man was kind of beaten. So he went into a Chase bank, parked his car out in front of the bank, right in front of the bank, walked inside, and withdrew $200,000 in cash. Now, I don't know why you would need $200,000 in cash. I know, I forgot the rules, FICA or something of the sorts. There is a specific rule that if you withdraw over $10,000, you have to have, a really good reason. You have to fill out forms. And this individual withdrew 200,000 cash, and as he left the bank and was making his way to his car, he was beat and had his whole life savings stolen from him. So kind of crazy. I kind of said, what do you think of this happening? What would you have happen? What would be going through your mind if that were to happen to you? And now we're kind of moving into the Fangum stocks. So just this week alone, I was taking a look at just the 1 week performance of these companies. Now we did look at them right back here as well. Facebook here at 5.82%. So this screenshot here that I'm kind of sharing, this is from earlier in the day, probably when I took the screenshot where Facebook was a little bit higher. Looks like it, may have fell toward the end of the day, but overall, these companies are on fire. I think as I move over to Fidelity and I put more capital into my taxable account, I'll more than likely focus more on growth companies. That's what I did in my M1 Finance account for growth. I have Amazon, I have Facebook, I believe I have Netflix and a few others, but I'll primarily be focusing more on growth in the taxable side versus dividends within those accounts, just because I can buy and hold. And as long as I'm buying and holding, don't get paid any dividends, it doesn't cause any sort of taxable events for me. And that's just always nicer. And then we already covered our stock market weekly recap for August 3rd through the 7th. So we have all the changes there. And that is it for today's video. So that is pretty much going to be wrapping up today's video. Let me know down in the comment section below, what do you think of everything that we kind of discussed? If you have any questions for me, go ahead and drop them down below. But otherwise, that is going to be it. Thank you all for tuning in, watching till the very end of the video. If you guys did make it to the very end, let me know down in the comment section below, and I will see you guys in the next video. Bye bye.